Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. I'm so excited to welcome you to another promising edition on the Extreme Speed Live. My Before we kickstart the session, let's run through our daily routine to confirm that we are all on the same page. So if you can see my screen and you can hear my voice loud and clear, please let me know in the comment section by typing in hi. Your highs will give me a feedback that we are good to go and that you can hear and see my screen very clearly. Thank you very much as I wait for your feedbacks. Oh, great. Thank you very much, guys. I can see a handful of comments right here. Thank you very much. Top Mind, thank you very much. I see your comment. Selo Magato, thank you very much. I hope I pronounced that name correctly. Valia, good morning to you. Thank you very, very much. Hello, Carrie. Good morning to you. Thank you very, very much. Um, I see your comment there, Top Mind, and thanks for the compliment. I also see here 2J3ME. Thank you. Okay, you new here. Glad to have you around with us. So I hope you stay tuned in so you don't miss out on any of the valuable ideas we will be talking about today. Then another thing I've noticed in the comment section, I see comment from Brave Ann. Please, I want to bring to your attention the growing issues within the comment section as regards to spammers and comments attempting to mislead or promote external platform, which could pose risk to your online security. So I avoid you clicking on any link or joining whatever referrals being given in the comment section, as Extreme Speed is in no way affiliated with this statement. So please be very, very careful and mindful of who you talk to or who you join behind the scenes on this particular platform. So with that being said here, I welcome you all once again to yet another promising edition on the Extreme Speed Live as we enter the midweek, which promises to be another second phase of the week. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host as I will be taking you on a trading journey where we shall be evaluating the financial market together using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action today. Well, since the beginning of the week, we have been monitoring for major financial assets, which includes the US All Spot, the USTech100, GBPUSD, and of course the XAUUSD, all of which have done pretty well since the beginning of the week. In fact, we've done very, very well this week, and we shall be looking at how we will be managing our existing positions while we also prepare ourselves for the New York session today. So I encourage us all to stay tuned in so we don't miss out on any of the valuable ideas we will be talking about today. Now, for those of you who are joining me for the first time, I know you will be wondering what this is all about and what is it that you really doing in this on this platform. Well, as technical traders, we usually gather here every day to come together as a community and engage in follow-ups and reviews of our current positions in preparation of the New York sessions. Now, this session kickstarts officially 10 a.m. UTC, 11 a.m. West African time, and I recommend that you stay tuned in during this time so you don't miss out on the insights that we will be sharing today. My aim in this community is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you will become at comprehending our analytical approach and utilizing the information gathered here to enhance your own trading decisions and strategies. So once again, I extend a warm welcome to you guys and encourage you to actively engage in the comment section. So with that being said, we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment today. And of course, for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the assets we have been monitoring since the beginning of the week, we have been focusing on both the United States and the United Kingdom economic dockets. Now, for today, Wednesday, December 20th, we have a bunch of impactful events we are looking out for. Well, the impactful ones had already happened this morning, and that is the Consumer Price Index from the United Kingdom. However, since there are no other impactful event, what I did was to include the medium impactful events so that we can also have an idea into what majority in the market will be looking out for to guide their trading decisions for today. Now, the first one that happened today is the Consumer Price Index from the United Kingdom. And for those who don't know, this data examines the average change in prices paid by consumers for goods and services during the last month. Now, a higher than expected CPI can lead to concerns about inflation, impacting market sentiment as it may prompt expectations of tighter monetary policy to control rising prices. Now, if you look at what came in here this morning, you will see that all the data for the CPI month on month, year on year, and of course the core consumer price index all came in below expectations, giving us a deviation, in a negative deviation in that regard. Look at what we have here compared to the previous month. We have minus 0.2%, 3.9%, and 5.1% respectively, as against the 0%, 4.6%, and 5.7% respectively for the previous month. So it's a sign that the inflationary pressure in the United Kingdom is gradually reducing. Now, what is the implication of this? Now, remember last week, Andrew Bailey's made an hawkish statement which suggested that there is a likelihood that there's still going to be more interest rate hike from the Bank of England. Now, with this one now showing that inflation is gradually thinning out, is this statement still going to hold? As this is a sign that whatever they've been doing so far has been having a positive effect in taming inflation, the sticky inflation. So at this point in time, the market had reacted negatively to this data, which of course resulted in some very strong bearish momentum we saw this morning on the GBPUSD. But we will be looking at how we will position ourselves for the next move on the GBPUSD today, so I encourage us all to stay tuned in. Now, later on today, we have some other events from the United States, which I have two here, which I think are very, very important. Well, the first one here is the Consumer Confidence Index, which is released on a monthly basis by the Conference Board, and this data here is a survey gauging sentiment among consumers in the United States, reflecting prevailing business conditions and likely developments for the month ahead. Now, one important thing about this is that this data shows us a picture of whether or not consumers are willing to spend money. And this, of course, is considered to be a key factor, as consumer spending is a major driver of any economy. Now, generally, a high reading is considered as bullish for the US dollar, while a low reading is considered as negative. Now, from what we have here, we do not have any data for the previous month, but one thing for sure is that I think if an hour or 30 minutes into this event, we're usually going to get an insight into what data we will be using to gauge the actual figure. So let's look forward to see what the actual data will be on that one. Then later on today, much more later in the day, we are going to be looking forward to the speech from Austin D. Goolsbee. Goolsbee is the 10th President and Chief Executive Officer of the 7th District Federal Reserve Bank of Chicago. So he's going to be giving a speech later today, and of course everyone in the market will be looking forward to hear what he has to say. And of course, whatever he says today will be giving us an insight into the monetary policy outlook of the Federal Reserve, and of course the potential future of policy actions for the Federal Reserve as well. And everyone will be closely analyzing his rhetorics for clues about future policy direction. So this is another event everyone in the market will be looking forward to for cues for today. And one thing for sure we do know as technical traders is that the anticipation of this event often reflects on the chart as price action. So talking about price action, let's move right into the chart and let's look at things from a technical standpoint. So I'm here to open up my USOILSPOT charts, and it usually takes a couple of seconds or more before it loads up. So let's take some time to wait for it. I see your comment, Rafiki8. Good morning to you, and thank you very, very much. So here we are, it finally loads up, and the first asset we are going to be taking on this morning is going to be the USOILSPOT. And in the last since the beginning of the week, actually, we have done pretty well on this particular asset, scooping close to 500 pips in profit on this particular asset. And let's quickly run through how the week has started for us all. After all our 3 buy positions still remains very much intact, yielding approximately 350 pips in profit as oil prices break a 2-day winning streak to the upside. Now let's look at what happened at the beginning of the week and what led to the decisions we made throughout the course of the week. Now at the beginning of the week, we saw how price action was initially confined within the range around the $72.60 level and the $71.96 area to emphasize the level of indecision during the first 10 to 12 hours of the week. And of course, you know how we do it in this community, especially when we identify such patterns. We exercise patience and wait for price action to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. Now, remember I told you at the beginning of the week that I already had a sell position which actually moved close to about 100 pips before the bullish momentum came in, and instead of price action retesting the ascending trend line, maybe to incite a downtrend scenario, that was not the case, as instead we saw an engulfing bullish candle breaking out of that ascending trend line to signal that we might likely be on the verge of another wave of bullish momentum. And remember that at the beginning of the week, we decided to have our buy stop order above the resistance zone of this range to trigger our first buy position for the week. And in fact, price moved considerably well as we saw price move over or approximately 200 pips move before the bearish momentum came in. And of course, you know how we do it in this community. When price moves significantly well in our favor, we move all our stop losses to protect position. And if you had done that, you would have been taken out with a reasonable amount of profit, a minimum of between 100 to 150 pips, depending on where you had moved your stop losses to. Now, during our live session yesterday, while we were trying to dissect the current market structure, we talked about this bearish momentum, which we considered to be a retracement of that impulsive leg that tested the $74.50 area. And in fact, we did emphasize how crucial price action, where price action is yesterday. Remember, we said price was around that resistance zone of that flat channel we identified at the beginning of the week, which interestingly shares a beautiful confluence with that ascending trend line we spotted at the beginning of the week. So we had a beautiful confluence here, and I did mention here yesterday that we shall be buying as long as price action remains above both the ascending trend line and that key level at the $72.50 area. So we did buy even during the live session yesterday, and in fact you saw how price transitioned into a reversal pattern around that area as we saw this something like a double bottom structure. And we also identified another level at the $73 area, which we said we will be using to add more position to our existing buy trade. And then we also had one more level at the $73.70 and of course the $74.50 area, maximizing the potential of this bullish move. So far so good. We have roughly accrued over close to 500 pips if we consider all the positions we took at the beginning of the week. And for those who are part of this profitable journey, well done, and kudos to you for being on standby to capitalize on this opportunity. And as it is right now, it is very, very important that we move all our stop losses and safeguard the current buy positions we have right now. And first, based on this current structure, I'm of the opinion that anywhere around the $74.30 area and of course the 74 area seems most appropriate to lock in profit on all the buy positions on in our portfolio on the US All Sport right now. And the reason why that is simply because we are at a crucial juncture where price has just finally broken out of that highest level for this week at the $74.50 area. So let's see if this area is going to be serving as a platform for new buying opportunities. And besides the technical side of this, we also have some other fundamental aspects behind the scenes that is supporting the US All Sport at this point in time. Now, remember, we talked about the geopolitical disruptions in the Middle East, particularly stemming from attacks by the Iran-led Houthi militant group on commercial vessels in the Red Sea. Now, the United States yesterday responded by establishing a task force to safeguard Red Sea commerce in light of these attacks. However, the Houthis have pledged to defy the US-led naval mission and continue their assault. Now, with this situation here, it is very, very possible that this whole activity in this region will be disrupting the supply of oil. And when there is a disruption in supply, then what happens? Demand increases. And when demand increases, what happens? Price will of course definitely rise, and this of course is one of the factors that is affecting the ascent of oil prices at this point. Then another thing came up yesterday as we saw the S&P Global Commodity Insights suggesting an anticipated increase in US oil production, contributing to the robust non-OPEC plus supply growth that may outpace global demand in coming year. Now, this projection introduces a potential constraint on the upward movement of crude oil prices. Now, adding to the mix is the American Petroleum Institute, that is the API weekly crude oil stock for last week experienced a rise of 0.939 million, reversing the previous decline of 2.349 million. Now, anticipation surrounds today's release of the crude oil stock change report by the U.S. Energy Information Administration, which with expectations pointing to an improvement in stockpiles, forecasting a decline to 2.23 million from the previous 4.259 million. Now, this expectation here is going to be supporting an ascent in US oil prices. And of course, we want to ensure that all positions are secured at this juncture, as if this report comes in just as expected or even below the expectation, there is a high chance that price will continue to the upside. Now, with all these fundamental factors behind the scenes, we find ourselves at a pivotal juncture with market participants eagerly awaiting these figures. Now, how do we intend to position ourselves for today's trading session? Remember, I hope you've moved your stop losses accordingly on all the buy positions we have right now, as anything could happen at this point in time. Now, with this in mind, let's scale up into the higher time frame so we can have a technical and holistic perspective into what is really going on in this market. Now, on the 4 hours time frame, which is, I want to refresh our memories as to what we saw here. Remember, at the beginning of the week, we did confirm that price action has been very, very bearish since the month of October. And in fact, we have a descending trend line in place after marking out the series of lower highs in this particular market. Then we also identified a key level at the $72.50 area, which we said we will be using to guide our trading decisions for this week, exactly around here. This level here had played a major role in determining the direction of price action since the month of November. Now, one interesting thing we saw here, despite the strong bearish momentum, was the inability of sellers, despite the bearish strong momentum, were unable to break down the $68 zone in the last since the beginning of this month to further emphasize the strength of the buyers. Now, we saw price action break out of the descending trend line here, and then we positioned ourselves just above the key level at the beginning of the week to capitalize on the uptrend move, and this was exactly what guided our trading decisions since the week began. And as it is right now, it appears that price action is gradually finding momentum, more momentum to the upside. And in fact, how do we intend to capitalize on the next big move at this point? So at this area here, I have another level at this point, which I would like to use as a yardstick. That's a $75.30 level. So let's mark out this level right here, as you will see how it had played a major role in determining the direction of price action since the end of the month of November. So we mark this level out, $75.30 level, which a breakout retest of the structure will be welcoming more buy positions in this particular market. Now, with the information we have gathered here on the 4 hours time frame, let's scale back down into the 1 hour time frame to see how we shall position ourselves for the next big move. Now, scaling back down into the 1 hour time frame, hold on a second, I'm trying to load up my chart here. Are we still on? Are we still on? Please, can I get some feedbacks in the comment section that we are still live? All right, give me a moment. Let me sort this out. I think I'm having issues here. All right, I'm so sorry about that. I just thought we are offline because I wasn't getting any signal from my hand. Thank you very much, Leonardo DV, for that confirmation there. Greystone, thank you very much. All right, so I think we are all back online, and please, I need your feedbacks to really confirm that we are good. So, like I was saying earlier, I said we are going to be scaling down into the 1 hour time frame to have a better perspective into what is really going on here. Now, since the beginning of this week, the $74.50 level has finally been broken out of. Remember, this area was serving as a strong selling niche since Monday's trading session. Remember, this level here was the barrier that negated our uptrend continuation at the beginning of the week. And in fact, in the last 24 hours, this area continued to remain as a barrier, as you will see here. Now, finally, the price action has now broken out of the structure and retested it, triggering our fourth position in this market. We will continue to maintain a bullish bias. Now, for those of us who missed out on this single breakout of the structure, let's exercise patience and see if the market will come back and retest the structure to give us another opportunity to join the uptrend move. Now, if price action continues to find new highs, a breakout of this $75.30 level, remember we just identified this on the higher time frame, will definitely welcome more buy positions in this market. So let's mark out these levels at this point, and let's continue to wait out for new trading opportunities at this juncture. Now, in as much as we hold on to a bullish bias at this point, we cannot ignore the potentials of sellers, though the market outlook here is still very, very bullish. Remember that at the beginning of the week, we did identify an ascending trend line which has been supporting the bullish momentum since the beginning of this week. If it happens that price action drops and break down the $74.50 level and continue selling pressure below the structure comes in, we might be seeing a counter trend move to the downside, maybe to test the ascending trend line in an attempt to incite the second leg, or let's say the third leg of the bullish momentum. But personally, I wouldn't be selling if price action breaks down and retests the $74.50 level. I wouldn't be selling at all, as I want to see how the market will react to the structure. It's more or less a counter trend opportunity, and if you are a scalper, day trader, or those who feel comfortable taking advantage of counter trend opportunities, you may be looking at a minimum of 75 pips to catch here at the $73.70 level, or a maximum of about 120 pips around the ascending trend line. So in the meantime, I maintain a bullish bias, but if price drops and breaks down, retests this ascending trend line, this could welcome a selling opportunity. So I encourage us all to mark out these levels and trend lines, as we will be needing them as a reference point to guide our independent trading decisions for today. So if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. So as usual, I will be taking the next 5 seconds off. I wouldn't be taking that long anymore because of the limited time we have at this juncture. So if you have questions, let me know in the comment section. And if there are none, we'll move on to the next asset on our watch list. All right, I see your comments, Iman Newton. Good morning to you. Thank you. All right, so in the absence of no further questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech100, and our USTech100 did very well before we were taken out of that position with a significant amount of profit. We had about 3 positions running in profit before this strong engulfing bearish candle took us out of all the buy position. So let's quickly run through how the week started for the sake of those who missed out on our earlier edition. So at the beginning of the week, it was more of a consolidation phase as we had price action confined within the 16,645 level and the 16,590 area, as you will see here, giving us a flat channel to work with. And you know how we use flat channels in this community, especially when we identify them on the chart. We do understand that this predicts the level of uncertainty going on in the market, hence we exercise patience and wait for price action to either break down the support line to give us an opportunity to sell, or break down the resistance line to give us an opportunity to buy. And at no point in time did we see price come even close to the support line, let alone considering the idea of even selling. So it was more of buying this asset at the beginning of the week as we positioned ourselves just exactly above the 16,645 level to capitalize on our first buy position for the week, and we went on to add more positions, had the breakout of our key level, had the 16,670. Then during our live session yesterday, I did mention that we move all stop losses to anywhere below the 16,700, and of course price action never came close to that area. Then with a buy stop order again above the 16,750 level, we added the third position for the week. And if you had missed out on that one, in fact the market came back to retest that structure multiple times, giving us the privilege to be part of that move. And so far this week, if you are taking advantage of all those 3 positions, the first position moved over 190 pips, the second position moved over 160 pips, and then the third position moved over 80 pips. That's roughly over 400 pips before the bearish momentum came in. And I do hope we moved our stop losses accordingly, as you all know that whenever price moves significantly well in our favor, we move our stop losses accordingly to protect our positions against any such sudden pullback, such as the engulfing bearish candle we saw here yesterday. And in fact, if you had done that, you must have been taken out with a minimum of, let's say, 300 pips on this position, depending on where you moved your stop losses to. And for those who capitalize on this, once again, congratulations and kudos to you. So at this point, we do not have any positions running at this point, unless you had actually sold that engulfing bearish candle that happened here. But if that is not the case, we are clean at this point with no positions, as we want to see what the next line of action will be for today. And in order to do this, I would like us to refresh our memories as to what really happened what we saw on the higher time frame to have an holistic perspective into what is going on in this market. Now, scaling up into the 4 hours time frame. Okay, the chart just loaded up right now. This is what we saw at the beginning of the week after taking into consideration the nature of price action since the beginning of this month. And if you look at the structure and if you do it appropriately, we have an ascending channel. So when we connect the series of higher highs, we have the resistance line of the ascending channel. And when we connected the series of higher lows, we have the support line of the ascending channel. Now, I shared with you on Monday that we have a marginal line which separates the upper half from the lower half of the ascending channel, as you will see here, to buttress the strength of the buyers in this market. And we did talk about the fact that since price action climbed above this ascending trend line, price action had continued to remain above the structure, which further still emphasized the strength that the buyers have in this market. Now, this trend line here, we said we will be using it to guide our decision for the week. And as you will see right now, the bearish impulsive leg that started at the early hours of today, breaking down that structure to the downside, is gradually approaching that ascending trend line. And interestingly, it shares a confluence with the 16,750 level. So what we're going to be doing here today is to wait and see how the market will react to the 16,750, which lines up with that ascending trend line to decide what our next line of action will be. Now, the question going into the New York session today is, will price action respect this ascending trend line one more time, where the appearance of a reversal pattern or buy pressure will incite another uptrend continuation, or are we going to be seeing price action break down both the 16,750 and the ascending trend line to incite a sell-off, maybe back into that support line of the ascending channel right here? So let's see how this is going to play out when we scale down into the lower time frame on the 1 hour chart. Now, scaling down into the 1 hour time frame, our center of focus for today is going to be around the 16,750, where depending on how price reacts to the structure will determine if we are going south or we are going to the upside. Now, in addition to the 16,750 is a trend line which I want to capture here. If we bring out our line chart, you will see that we have this trend line. Let me mark it out correctly. So we have something like this. So I would like to thicken this a little bit to emphasize its importance at this juncture. So let's give this like this and then bring back our candle chart to see if there are to do some adjustment to it. And here we go. So we have an ascending trend line which has been supporting the bullish momentum since the beginning of the week, as you will see here. And this trend line here is going to play a major role in guiding our trading decisions for today. And look at how beautifully it shares a confluence with that 16,750 level. So let's see how the market will react to this area. Now, to buy the USTech100, I already have a buy stop order above the 16,835 level, which happens to be the highest point price action has been for this week. Let's see if a breakout happens. We want to be adding more buy positions there. However, before the breakout happens, we are likely going to have the privilege of joining that uptrend move. Now, as it is right now, price is at a crucial juncture where it shares a confluence with the ascending trend line. So I will look out for reversal setups. It could be a double bottom structure, head and shoulder pattern, or falling wedge, whichever case it may be. Mark out the neckline, then the breakout of the neckline, retest of it will welcome an opportunity to buy even before the breakout of the 16,835 happen, where we will be maximizing the potential of this bullish move. So let's mark out this trend line and the 16,075 level, as it's going to be playing a major role in determining our direction for today. Now, if the opposite happens at this juncture where price breaks down the ascending trend line under 16,750, then we will be looking out for selling opportunities. So right below the, I want to bring this one out. Hold on a second. I think I locked this in. So I want to take this up right here. So we shall be looking out for selling opportunities as soon as the breakdown of both the ascending trend line and the 16,750 level is broken. So let's mark out these levels for today, and this is what we will be using to guide our decisions for today. So if you have any questions whatsoever, feel free to let me know in the comment section. Because of my time, I will just wait for some 5 seconds and see if there are any questions before I move on to the next asset on my watch list. All right, so in the absence of no questions, I want to assume that we are all on the same page. And then I saw your comment, Omario94. Are you still around? You said you are new with us. Glad to have you around, and you really don't know much of what is going on here. So what I will just say here is that you exercise patience and just listen through what we are doing here. We are technical traders looking out for trading opportunities ahead of the New York session. So I will just encourage you to exercise patience, listen through the session, and be part of our subsequent editions. The more time you spend with us, the better you get to understand how things works here, and eventually be able to use the information gathered in this community to make your own independent trading decisions. So I also want to emphasize here that please watch out for spam messages in the comment section that want to refer you to other platform in name of profit or whatsoever in other platform. Please be mindful of this, as exchange speed is not does not have any affiliation with anybody that mentions other platforms or groups in the comment section. So please be mindful and don't fall prey to these scammers and spammers in the comment section, please. All right, so in the absence of no further questions, let's move on to the next asset on our watch list. So the next asset on our watch list for today is the cable market, that is the GBPUSD. And remember that we had we had a sell position at the beginning of the week before we had this buy position triggered during the early hours of yesterday's trading session, giving us some significant amount of profit before this bearish momentum began a couple of hours ago, which was as a result of the UK data that came in this morning. So at this point, all our buy positions are being closed with a minimum gain of about 80 pips due to the pound sterling facing bearish pressure following the release of the UK data indicating a decrease in annual inflation as measured by the consumer price index from 4.6% to 3.9% in November. We will now exercise patience at this juncture and observe market reaction around this area before making any informed decisions. Now, for the sake of those who are not part of our earlier sessions and do want to have an idea into what really happened at the beginning of the week, and of course what led to the decisions we make, let's run through what really happened at the beginning of the week before we go into the details of what our next course of action will be. Now, if you look at the structure here at the beginning of the week, we had the situation where action was confined within the 1.2700 level and of course the 1.266500 area, giving us a flat range to work with. And usually whenever we identify this kind of flat range, it emphasizes the level of uncertainty that is going on in the market at that particular point in time. And usually when we have this, we just have to exercise patience and wait for signals, which of course will come in the form of either a breakdown of the support line to give us an opportunity to sell, or the breakout of the resistance line to give us an opportunity to buy. And look at what we saw here at the beginning of the week. We had a sell position triggered after we saw price break down, retest the structure, and in fact price moved about 35 pips thereabout before the bullish momentum came in. And if you had moved your stop losses, the worst case scenario here was a break even on that sell position. And during our our session on Monday, I did mention that if price action climbs back above the support line at the 1.2665, that is a breakout and retest, giving us signs that sellers have lost the momentum. We look out for buying opportunities there. Then we added more positions at the breakout of the 1.27, and of course added a final one yesterday at the breakout of the 1.27350, which led into some series of lower highs that led into the breakdown of that ascending trend line that was supporting our bullish momentum since the beginning of this week. And now at this point, we are in no positions right now, and you shouldn't be. And let's see how we will plan for today's trading session. So as it is right now, I am of the opinion that market participants, following the sharp reaction to the UK data this morning, at this point, they will now be already digesting the implication of this data. And if a deep understanding of what is going on and the implication of this data will now give way for another trading opportunity. And as you will see right now, price action is back into the support line of the range we identified at the beginning of the week. Remember, we had this range marked out at the beginning of the week, and right now price action is back into the support line of that range, which we have here. And as soon as price got into the structure, we begin to notice the emergence of buy pressure. Now look at the nature of these candles in the last 1, 2, 3, 4 hours in this market. You will see sharp rejections of that zone around the 1.26650 level. And the lowest point price action has been for this week is at the 1.2630 level, and if buy pressure persists around this area, then we are going to be having a new higher low, which could be a platform to begin the next wave of bullish momentum, hereby making this bearish momentum the retracement of that impulsive leg that started the week to incite another wave of bullish momentum. Well, for me on the GBPUSD, I still maintain a bullish bias. Remember what we saw at the beginning of the week after draw. Zooming out on this chart, we saw the bullish momentum that started on Wednesday of last week trading session, where we said the bearish momentum we saw that started on Friday may be as a result of a retracement move. And in fact, to project where the retracement phase will end, we did use our Fibonacci retracement tool, run it through the previous impulse leg, and aim at our golden zone area, which is exactly between the 50 and the 78.6% of the impulse leg, which if you do it correctly, we should have a situation where between the 1.265 and the 1.25650 level will be an area we shall be looking out for buying opportunities. And you saw what happened here on Tuesday. We saw that as soon as price got into the between the 50 retracement and the 61.8% retracement, we begin to notice some buy pressure resume around this area, resulting into that impulsive leg we saw here. Now, as it is right now, price action is back into this area, and if price maintain itself above this 1.263, are still going to maintain a bullish bias in this market. So at this juncture, zooming into how the market is reacting to the 1.2665, I want to see something like a reversal setup to join that uptrend move. Now, if we do join the uptrend move, please note that we want to exercise patience as soon as price action gets into this ascending trend line. Remember, price broke down the structure about 4 to 5 hours ago, and we could see price come back into the structure to incite a downtrend move. So because of this, so as soon as price gets into the structure, that area between the 1.27 and the ascending trend line, move all stop losses, secure your positions while we wait to see how the market will react to that trend line. If it breaks out of the trend line, then this will welcome more buying opportunities, and if selling pressure persists below the trend line and we see signs that buyers are finding it difficult to break out of that trend line, this could incite a sell-off to the downside. So let's take note of this situation. Now, going back to where price action is right here, where we have been noticing buy pressure, I have a simple setup that we will be using to guide our trading decision for today on the 1 hour time, on the 15 minutes time frame, sorry. So when we scale down into the 15 minutes time frame, you will begin to see an interesting situation unfold behind the scenes. Now, on the 15 minutes time frame, this is what I have. Following the impulsive move that brought us into this point, you will see price action was confined within the 1.267 and the 1.26510 area. As you will see, we had a little bit of consolidation phase around that area before price action broke out of the 1.267 here, looking more like a false breakout at this juncture. Now, if price action climbs back above the 1.267, I have a buy stop order above the structure to capitalize on an uptrend continuation. However, if the market says otherwise and price drops below the 1.26510 level, then this will welcome some sell positions in this particular market. So let's see how the market will play out today, as our center of focus is between the 1.267 and the 1.26510 area. Now, there's one more thing I would like to show you on the 1 hour time frame. If price action ever breaks down that structure, please note that if price continues to drop and gets into the 1.26 area, which interestingly shares a confluence with that ascending trend line we spotted on the higher time frame, move all stop losses to secure your sell positions and wait to see how the market will react to the structure. A breakdown retest could welcome selling opportunities, and if reversal patterns is identified above it, then this will be a sign that buyers are still strong and could welcome more buying opportunities. So let's mark out this level. Keep this in mind as we continue to monitor price action at this area. So this is my view on the GBPUSD. Let me bring back the 15 minutes time frame for those who would like to mark out these levels on their chart. So if you have any questions, I will just take the next 5 seconds. I'm already out of time, and then we'll come back to round off with the last asset on our watch list for today. All right. So in the absence of no questions, I would like to move on. Now, a quick reminder again, please, everyone in the house, kindly stay clear of anyone seeking your attention and wanting to refer you outside of this platform. Please note that there are potential scammers and spammers who may want to scam you of your money. So please be very, very mindful of anyone in the comment section trying to introduce you to other platforms to make profit. If they are really making profit wherever they are, there is no essence for them to come here to start asking you to come and take some of the profits too. So it's more like a scam approach. So please be mindful of this. So with that being said, here we will be moving right into the last asset on our watch list for today. So the last asset on our watch list for today is my favorite asset, and that is the XAUUSD, popularly known as the gold spot. And in fact, we also have a tremendously profitable 24 hours on this asset, as we have been buying this asset since the beginning of the week, and right now it appears price action has taken us out of all the buy positions with a minimum of how many pips now? Let me see. I think I wrote it out somewhere. With a minimum of about 300 pips at least on this one. Now, the modest uptick in the US dollar and the prevailing risk on sentiment are noteworthy influencers, creating headwind for safe haven assets such as the gold. Now, the recent market's dynamic indicates a growing belief among participants that the Federal Reserve may ease its hawkish stance. Now, this sentiment, coupled with expectations of a potential rate cut as early as March next year, keeps U.S. Treasury bond yields and the U.S. dollar around their lowest point in recent time, and this of course is lending support to the prices of gold. Now, amidst this development, caution prevails as this structure suggests that market participants may be opting to await the key U.S. inflation reading scheduled for Friday before committing to fresh, aggressive directional opportunity or bets at this point. So at this juncture, our strategy will revolve around the ascending trend line, which we identified at the beginning of the week. Now, for the sake of those who missed out on our earlier editions, kindly let's look at this together quickly before we run into how we plan for today's trading session. So right here on the 1 hour time frame, remember we had the price ranging between the $2,000 and $24.80 level at the beginning of the week, giving us a flat channel to work with, and of course waiting for either the breakout or the breakdown of that range to give us an opportunity to trade. However, we saw how price did break out of the resistance line at the $2,024.80 level, triggering our first buy position, and since then we kept on buying these particular assets. Then we added more positions at the 2030, added at the 2035, and one more at the 2043 before we were taken out of all the buy positions. And I do hope you moved your stop losses accordingly. If you had done so, you must have been out of all buy positions at this point. Now, going into today's trading session, what is going to be our plans? When is the uptrend continuation going to start, or how far will this bearish momentum go? Well, the first and first here is this uptrend continuation pattern, which we spotted here yesterday. Now, if you take into consideration the impulsive move that brought us to this point last week, you will see how price action transitioned into what is looking like a pennant, or you may want to call it a flag pattern, depending from which perspective you are looking at it from. Now, but most importantly, this pattern here tells us that it is likely for price to continue an uptrend scenario. And of course, from a theoretical perspective, whenever we identify this kind of pattern, we expect that some point in time price will break out of the resistance line of the pattern to incite an uptrend move, and this was exactly what happened yesterday as we saw our price broke out of the resistance line of the pattern at exactly our key level area, had the $2,030 area to trigger more buy positions for us. Now, from a technical standpoint, when price breaks out of a key structure such as this one, we do expect that some point in time price may come back to retest the structure in an attempt to incite the second leg of that bullish momentum. So as a regard of this expectation, I want to extend the resistance line of this pennant, or let's call it a flag pattern, so that if we price going to continue to the downside, we are looking at somewhere around the resistance line of that flat channel we identified at the beginning of the week, which shares a confluence with the resistance line of this pennant, to look out for new buying opportunities in this market. Now, another thing I would like to call our attention to is this ascending trend line here, which has been supporting the bullish momentum since the beginning of the week. And as you will see, this ascending trend line also shares a confluence with this $2,030 area. Now, I want to see how the market will react to this $2,030 area. If it breaks down the structure, then we might be looking at the resistance line of that flat channel, of that pennant or flag pattern, this one right here, to look out for new opportunities to buy. And if price continues to break down the structure, then we will look out for more selling opportunities. Now, if price is going to go this far to the downside, how do we capitalize on that one? As if you look at the distance between where price action is and the maximum point, that's about 100 pips, which we do want to be part of. Now, if this $2,035 level is broken to the downside and retested, I would likely be looking out for more selling opportunities. But before I go into that one, I had a simple setup identified on the 15 minutes time frame, which I think we can use to guide our decisions for today. And if you look at this closely, I already have a sell position running with about 45 pips running in profit right now. And what led to that decision? Well, if you look at the 15 minutes time frame, I was able to identify a trend line first of all. Then I noticed that buyers were finding it difficult to break out of the $2,042 level, leading into a situation where price action was confined within the $2,042.50 level and the $2,040 area. Now, with this situation here, I was waiting for either the breakout of the resistance line to give me an opportunity to buy, or the breakdown of the support line to give me an opportunity to sell. And in fact, the breakdown of the support line at the 2040 is sharing a beautiful confluence with this ascending trend line. So a breakdown of that structure would confirm that that trend line may no longer have the capacity to negate the bearish attempt. Now price has broken down the structure. How far will it go before we see another wave of bullish momentum? So I would like to allow this line here to reveal itself on the 15 minutes time frame, as well as we will be using it to guide our decisions for today. So let me mark this level correctly. So we shall use 320 instead. Okay, so we have the 2035 level right here. So we are looking at adding more sell position at the breakdown retest of the $2,035 level. So if price breaks down the structure, we continue to sell. Please note that while we sell the XAUUSD, let's ensure we move our stop losses accordingly, secure the current sell position, as buyers could come in at any point in time. Remember, we are still sitting above a strong ascending trend line we identified on the higher time frame. So let me go back to the higher time frame here. So we still have this ascending trend line. Hold on a second. So we still have this ascending trend line in place. which depending on how price reacts to the structure, which interestingly shares a confluence with the $2,030 area to welcome more selling opportunities if it breaks down and retests the structure. And also remember, we have the resistance line of this pennant right here, where we shall also wait to see how the market would react to that structure. So this is my simple view on the XAUUSD today. So I encourage us all to mark out these levels on our chart, as we will be needing them as a reference point to guide our independent trading decision. So mark out this structure on the 15 minutes time frame, and let's use this to guide our trading decisions going forward. So this is my view on the XAUUSD for today. So mark out this level and let's see how this is going to play out. If you have any questions whatsoever, feel free to let me know in the comment section below. So I will be taking the next 5 seconds. I'm already out of time, and let's see if we have, and if you don't, we'll just go on to round off on today's trading session. All right. So in the absence of no questions, I want to assume that we are all on the same page. I see you, Mango4UR. Good morning to you. Glad to have you around with us this morning. Leonardo Divi, you're welcome. Glad to have you around till the end of the session, and thank you very much. And it's on this note we shall be rounding off on today's trading session. In fact, it has been a beautiful and wonderful moment with you guys, as I did enjoy every single moment with you, and I do hope you had an insightful session as well. And I hope you are able to mark out these levels on the chart, as you definitely will be needing them to guide your independent trading decisions for today. And if you are done so, I would encourage and remind you that you want to be exercising quite a lot of patience, waiting for our structures to mature before you jump into any positions. So and also remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, you want to ensure you have a well-defined risk management strategy that you want to consistently use whenever you join any positions from your portfolio. For those who joined us for the first time, I hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information to guide your independent trading decisions. And once again, please avoid any links in the comment section referring you to other platforms. Please note that these are a form of scamming and spamming the comment section. Please be very, very mindful of that. Please don't fall for them. Extreme Speed will never introduce you to other platform via a link, especially this person is not an official of the Extreme Speed team. So please be very, very mindful, and thank you as you do so. So on this note, I wish us all the best of luck for today's trading session, and I look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how these assets have been doing, and at the same time get ourselves prepared for tomorrow's trading session. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.